Okay, good morning. So we'll talk one more time with respect to the term, how we talk about it, how we pitch, and some of the resources that we are going to use when we are talking to client, some of the questions of approaching also, and how easy it is to close a term policy and work towards our $250 weekly goal. And I'm glad a lot of people are taking advantage and going out and helping clients, which is the most important thing. So what I'm going to do is one more time, let's run a simple illustration. I'm picking Corebridge and once you log in, you get to this illustration page. So start a new case, QOL Flex Term product. This is the one that we are picking. QOL means quality of life, right? So this product brings quality of life to the people in some unforeseen scenarios, whether it is a disability or death also, right? So that's why it's called QOL. So that's to create, and let's pick some valued client, male, let's say 40 or 45, whatever our age group, and let's say preferred, and join in. Now, yes, we talk about that, we should first do the dime and all those things. But I would still say, again, I leave it to you and your field builder, the way you want to pitch it. But when I said, and my main focus is to have this family a backup plan in case of any health issues, in case of any challenges, right? So at that point, it really doesn't matter, how much liabilities. Yeah, more is always better. But I want to make sure at least they have $1 million backup plan, at least for further disability purpose. If they can go up to 2 million, that's great based on the premiums, but at least $1 million. If somebody goes below that, then we need to discuss like, hey, in some of the challenges, how much money do you really need? So that's why if I can do a quick dime, I'll do that, but I will not spend too much time on that. I'll say, let me just show you how much it costs for $1 million plan. And I always prefer to go to the maximum. And we'll discuss that why. Because when you go to 35 years, it will be a lot of premium. It will, you will see the numbers is big. And if you're not comfortable even in telling that number, we need to work on that, right? Because there is a reason why people are buying for 35 years. Now, because this client is age 45, you see we have all 35-year options. The moment I change it to 46, now you see 35 is gone. Now only 30 years. Because the insurance company is just planning to protect you till age 80, right? So 46 plus 35 is crossing 80. So this is another talking point to your client is that, hey, if you know that they are under age 45 or hitting 45, that, hey, this is your prime time to get at least the maximum amount of coverage or maximum amount of period that offers by the company. Because next year you won't be able to do that. And you can show by showing this thing. See, when you turn 46, you only have 30 years. You don't have 35 years. So let's go back to 45 and give this client a 30-year plan or $1 million and just select simple monthly premiums. Again, we are not getting into complexity of laddering the policy and all those things. I want to keep it absolutely simple in my first presentation. That minimum things that you will see, so their questions will be limited and confusion will be limited also. If I talking about let's do 100,000 for 20 years or 5 years or 10 years and then another 200,000 for 15 years, then they get confused. End of the day, they might end up saving 10, 15, $20, but we are missing the point. So yes, once you go through the whole simple approach, and if client is very analytical, technical, and asking questions, and too much bogged down with the premium, each dollar is sounds so much, then you can come up with the ways of of getting him something within his reach by doing either laddering or reducing, some amount or number of years. Those things are option, but not introduce those things from the beginning. Keep it to the very simple level. So I say this is when I select this rider, I show, hey, we'll talk about this also, that you have something in your plan automatically added. See, even if I want, I cannot unselect it. It's part of the plan. And I'll explain you what that is. We don't need any additional rider. This is pretty good. And let's run the report. And then I just quickly run it. So once you have this completed, then we'll see the illustration. So we see that, for $1 million annually, it's costing about 2,700 and guaranteed 50, premium pay 50. And I think it shows this here also, like what these numbers are. So let's click on the PDF to open the actual chart. Now here you can always talk about, because not many people are aware of the insurance industry. They are not aware about many of these companies. We think they are very big companies, but trust me, a lot of people who have not, have any interest in looking into other areas, they are not aware. I have clients who have not heard about even Nationwide also and AIGs also, because they never pay enough attention into other areas, right? It's nothing wrong with that. So my objective here is to make sure they understand these are big companies that I'm offering. So this is one of the point that we need to highlight. And I can use highlighter also, like this plan is from American General, one of the big companies out there, AIG, right? Corbridge AIG. And I also highlight this point that in last 12 months, this company has collected close to $30 billion in the premiums, just the premiums, the premium that you see on your policy. They collected $30 billion in last 12 months, billion with a B. Now that's a very big number, right? So that gives your client confidence. Okay, this means a lot of people are buying these plans. I'm not the only one. It's not as, and this is just one company. Think of this, there are so many other companies out there who sell these products. So this is a big number. Then I will also tell them about that a lot of time, when people buying these plans and policies, especially with respect to insurance, they always think whether these companies really pay when the time comes, or they just cut some corners and find some ways not to pay you, right? People who have no understanding about the industry, they will ask these kind of questions for sure, that do they really pay? Then I'll say, if you see, that's a good question. If you see here, in last 12 months, they have paid $22 billion in claims. Now, 22 billion is again a very big number, right? So that gives them a confidence that yes, if something goes wrong, company is going to pay. And then I can add few stories if I have enough time, that, I helped out a client who get into this situation and, the family got paid, or, or a client that I know, I can use that. And that's the reason, because of this, that is the reason this company is highly, highly rated. These are the top, four of the top crediting bureaus, S&Ps, Moody's, AM Best, and Fitch. And from every one of them, they are getting the best rating. Now, how do they rate them? In terms of their business volume, in terms of their claim processing, in terms of their customer service, everything they analyze and then they rate. So what this tells me is that I'm working with one of the best company. What you're getting is you're getting a plan from one of the best companies. So this gives enough confidence about the company, about the industry, that yes, these things work. Now, why I'm talking to you regarding this plan today is not because, yes, a lot of time I think, or people think, life insurance is when I die, my family gets this money. And that is definitely one of the reasons. But my intention today is to show you something that is even more important that you all need to understand, right? Now, what that is, it's called accelerated death benefit rider, correct? Or in, yeah, or in simple term, it is also known as living benefits, right? So if I'm doing on Zoom, I always highlight these lines also. Now, living benefits means some of the benefits that you are eligible to get out of this plan throughout your lifetime also. And that is super, super important that, not only it is helping my family after me, but it is also helping me and my family during my lifetime. Now, how that is possible or how that will work. So remember, I showed you that rider which is inbuilt into the plan. That's exactly this rider. It is right here. Now, how it help? So now here, if you are sitting with the client, if they are there, you always ask them to read these things. And especially if they're sitting husband and wife, you point to the wife like, ma'am, can you read this line? That what it says, critical illness, accelerated death benefit rider, right? And then if while they are reading, you can start highlighting. And critical illness accelerated benefit rider provides you access to your policy's death benefit if you have one of the qualifying critical illness or conditions specified below. And what are those conditions? Qualifying critical illness, major heart attack, bypass, stroke, cancer, and few others important ones. Now here the question comes. Now tell me how many people do you know in your inner circle that have gone through some of these situations or one of these situations? Or what do you think one of the common challenge that people face in our demographic out of these? And you will get the answer. Definitely stroke. And as we hearing lot and lot, especially in women's nowadays, even in their early 40s and around that age, they are getting a lot of breast cancer also. That's happening a lot. Yesterday I was talking to someone and I was just talking about this plan, and then he said, his sister got at around age 38 into that, and now going through the procedure and all the things, but it is very, very unpredictable nowadays. So this is one of the questions that you will hear, like, I am the breadwinner in my family. Why do I need it for my wife? Right? She is not working. She's a homemaker. But if any of this situation happen to your spouse, who is not working, staying home, who is responsible financially to take care of these things? Right? Still, it's the family responsibility. Then why not to have a backup plan? Then sometimes I ask that question also, if they don't have any of the coverage plan, like, okay, what asset are you planning to use if any of this thing happen? You can write it down. If you're taking notes, write it down. What asset are you planning to use if any of this situation happens? Now, they never thought about this, but this will give them a reality check that, oh, it means there will be some payments that we have to do. And I don't know how many of you heard when in the Florida bootcamp, Shobha shared, and in one of the webinar also she shared, Shobha Potu, her story, like when she was going through the cancer treatment, she has to pay hefty amount for one of the vials, one of the cancer or one of the chemo vials injection that she has to buy, which was not covered by the plan, the insurance also, health insurance, which is costing almost like $50,000 for one injection, and she need like 8 of them. Now, people may think, yes, I have health insurance, I have this thing and that thing, but you never know. There will be always surprises. So which asset are you planning to use at that time? Do you want to sell your rental property, your home? You want to take out from your 401k, college education plan for your kids, or from your own equity from your primary home, right? When they start thinking, then it all of a sudden it becomes an urgent thing. And especially if both are sitting, the females are very protective of the family. They said, oh no, we cannot take chance. We have to do something. So this is just a critical illness. Then what about chronic? So again, same thing, chronic illness, what it is, we'll ask them to read if chronic illness happens, provide you access to the same, now what that chronic illness is, I'll ask them to read again here. If you're unable to perform without substantial assistance from another person, at least two daily activities of daily living for 90 consecutive days, or requires a substantial supervision like Alzheimer's and severe cognitive impairment. What are those 6 areas? Again, try to see if you can remember them. It's a good idea. Bathing, dressing, toileting, transferring, continence, and eating. And also know meaning of them. Most of them are self-explanatory. Continence is the word that not everyone is familiar. It's basically your capacity to hold the urine or the motions, right? So people at certain age or because of certain medical conditions, they cannot control them. They just let it go. So that is also one of the qualifying conditions for this thing, right? And lot of if you ask people, there are people around in our inner circle also who have been in these situations, maybe at a later age, maybe because of an accident or some other health issues. So people will relate to those stories, and all of a sudden it becomes an important thing. Now, third thing is terminal illness, accelerated death benefit panel. Again, qualifying terminal conditions. It is very straightforward. If your doctor, if a physician certified by a physician that reasonably expected to result insured death within 24 months from date of diagnosis, which is life expectancy is 24 months only. Now, this is state by state. Most of the states have 24 months. Some states have 12 months also. So before you say this word, make sure which state you are running the plan in, and you read it before you say that word. But no, but this is, and now we are hearing so many of these cases nowadays. You know, unexpectedly, no family history, no heredity, nothing, and all of a sudden, person is diagnosed with some kind of this issue and going through some challenges. So now in this plan, even if you get into any of these situations, remember I told you about the living benefits. Even during your lifetime, if you get into any of these situations, you can accelerate the death benefit, and company will pay you upfront a lump sum amount based on your plan and based on the severity. Now, for our internal purpose, for our partners here, the maximum anyone can go up to is $2 million that they can accelerate. Let's say if they have a $5 million worth of policy, they can only accelerate for 2 million. So that's why I was saying, if I wish, if I have to plan, I can try to plan for 2 million here. If their income supports, if their budget supports, if not, as much as you can up to 2 million. At least $1 million is always a good idea. So these three things, when you talk, it sounds much, much easier, right? Now, after that, now let's talk about, and then we will go here. Hey, so this based on a preferred health rating that I picked for you, based on what I know, it could be better, it could be, little bit down also, and the numbers will change. But let's see if you get this rating. So your coverage amount is $1 million, right? And $1 million, and then you are paying about around $7.50 a day, around less than $8 a day, right? For less than $8 a day, which is going to be same for next 35 years by the time you are age 80, right? The coverage will be there, and you have also the living benefits included in that plan. Now tell me, what are the chances that people end up utilizing this plan in their later ages, right? So then we are asked that, what are the chances that most of the people in our demographic have some of these situations? I'm not even worrying about the death. I'm just worrying about the health issues, right? Around 65, 70, 75. So many people we know in our inner circle that around in that age, between 70 and 80, they are into this situation. So if you end up getting into that situation, you are going to accelerate $1 million benefit, which will pay based on the severity a good amount of money upfront, right? So that is where we are pitching this plan. And that's why I'm not saying that we really don't have to do a dime or we have to do a dime. Yes, we still do a dime, but all I'm trying to say is get as much as you can for as long as you can so that you have a backup plan in case of an health issues, which is going to happen. If someone says, "Oh, I'm pretty solid. I don't have to worry about anything," then good luck to you. But by paying 2,700, this if you add all of these, whatever that number comes to be, 80,000, 90,000, you are in all these years, you are securing $1 million for yourself, and then you don't have to break into any other asset during your lifetime, right? And unfortunately, if that happens, right away, company pays $1 million to your family. And that too also 100% tax free. There are no taxes on this plan. And as I said, it's a level premium for 35 years. It is going to be same for next 35 years. So this is again a simple way to illustrate and talk about that. And you, so more emphasis will be on this because sometimes when you talk too much about death, not many people like that. But these things people can relate. They are seeing day in and day out. And unfortunately, lot of these are happening nowadays. I hear so many of these every other day. In our like our parties get together when you heard about someone else having something like this. So, so this is a simple thing. Now there's a slide also. Let's see if I can pull that. One second. Like some like there's a presentation in AIG portal which talks about this. Like if somebody doesn't know what is what is this accelerated benefit rider, what exactly it do. So you can have this and you read it and then you can share, with your clients in short also that hey, what I'm pitching is have these kind of benefits also. Chronic illness rider, critical illness rider, common illness rider, right? Now, some of the companies that are out there in the market, they offer, most of them have terminal illness for 50%, but not any other of these features. Or if they have accelerated, then have a very small amount to accelerate. So if someone says, oh, I have this feature, we still go ahead and say, let me review it if you're not paying over and if you have a 100% coverage of these in these riders also. So, but if anyone has any question on what this ABRs are and what living benefit means, what these three conditions are, this is the time to ask. And because this is the most important thing that is super important for every family to have. Don't miss this thing because if you understand this, the rest all will be very easy. You just have to run an illustration and submit an application. So, any question?
Yeah,
Hello,
I have.
Anuj. Bhai.
Oh,
Oh,
Yes,
you can
Taral,
go
you go
ahead.
first.
Yeah, thank you. Uh, so Anuj bhai, most of the questions that I had, you probably answered in your explanation. Thank you so much. I know that we have a chart for death benefit, and you gave us a cap of $2 million, wherein up to that much ABR a person can withdraw. But do we have a similar table that approximately this is the amount of ABR that you can take benefit of right now, or any sort of chart if somebody's interested in knowing that?
Yeah, so the brochure that they have, let's see if I have it here.
I think in the illustration, one of the page, it shows the range as well, if I'm correct.
Don't see in the illustration they have it, but
I think IULs does. Oh, okay. I think IULs does. I think not the
I
terms. Then
mm, let me see. Give me one second.
IULs, yeah, definitely does because I yesterday only I saw it show it to one client. But terms, I don't know. But IULs, yes.
No, I have it. I have it. One second. I have to move this zoom thingy. So in the brochure that they have for term product, this is another thing I'm going to talk about it. That we all need to have access to this. We all need to have this. So in this they have. I think they also removed from here. They used to have a chart on their previous brochure here, which talks about the minimum. One of the brochure has that there that gives a minimum how much you can accelerate at what age, and then maximum is definitely the amount that you have. But there is a minimum also, and then it's based on the severity. And I'll find that brochure which has that. I'll share with you.
Thank you. Thank you so much, Anuj bhai. And a follow-up question to that. So, say for instance, I withdrew X amount as a part of my ABR, right? And how will that impact my death benefit? So, is there a relation that, okay, if I have $2 million, for example, if I withdrew that much, then my death benefit will be reduced by X amount? I'm sorry if this is a very
So
basic question.
yeah, I no, I think it's a good question because this is one of the questions that client always asks. So let's say if you have $1 million policy and when you like anyone get into the situation, they submit a claim. At that time, company, analyze the whole situation and then they give you an offer. They sent you a letter that, hey, based on this severity, out of this $1 million, we can accelerate and offer you, let's say, $600,000, which is what you have. So now client have multiple options. They can say, yeah, this is great. I'll take this 600,000 and let go the policy. There is no more coverage, but I have got 600,000 out of $1 million. Or they can say, um, I still want my policy, but I don't need 600,000. I only need, let's say, 300,000. Can you reassess and send me if I take 300,000 as my AVR, then how much policy still I will have in place? So then they will reanalyze and say, you take 300,000 and we still have, let's say, 400,000 in death benefit, and you pay updated premium, right? So then they will. So though there will be multiple options that client have based on the severity and how much company is offering. But it's always a good idea, like, since it's a term policy, take everything that they are offering. So did that help?
Yeah, it does. Thank you so much, Anuj bhai. Those were my questions. Thank you.
Okay, Arjun, you were asking something?
Anuj, thorough question. If you see the page number 7, how do the rider works? Go to the second last paragraph, minimum accelerated benefit amount. That explains something. Right above the critical illness, minimum accelerated death benefit amount.
Okay, percentages vary.
Yeah, so again, I love to keep it simple again. The say based on the severity, company will analyze and make an offer, and based on that, you can decide, right? There is no fixed percentage that uh, for this condition they will give you 40% or 50%. They always analyze and look at the claim.
Anuj bhai, I have a secondary question about the discussion what you just initiated. What if the client takes, not 600, but then like, they're ready to take 300 and they want to keep the policy going. Uh, if they do that, can they put a claim again if something happens?
Yes. So if they keep 300 and then remaining, let's say 500,000, still 500,000 still there in the policy. And unfortunately, down the line, after a few years, they again get into any situation, they can still apply for another claim.
Okay. So each time you do that, like, your death benefit will be coming down, right? Like, say, because you're taking some money from that.
Correct.
Right. Okay. Got it. Thank you.
Right.
Mm.
Okay.
Anuj
One
bhai,
question,
yeah,
Anuj.
Sorry.
just
Yeah,
sorry.
Pawan.
Go ahead, Pawan.
Yeah. Just a one clarification there. Actually, I have two questions on that topic. So one is, so if somebody got a claim on a terminal illness on that policy, and if they, I mean, when they reassess, they take only 500,000 death benefit left out. I'm not sure. Can they again go against the terminal illness? I thought the terminal illness will go away. Only they left with critical and chronic.
So that is, again, I'm not sure because this is, we are getting into the
Yeah.
nitty-gritty of the product, like,
Right,
because
right, right,
terminal illness is,
right.
person is anyways not going to be there for a long time. That's what they're analyzing. But
Yeah.
if he survives for any whatever reason, right? Miracle happens, then still he has a death benefit that he has not encashed, and he can always get a claim again. I don't think there is a restriction that you can only submit claim
Okay.
once for terminal illness also. But again, there could be some fine lines that I don't know.
Yeah.
So you can always ask this specific question to the underwriter.
Okay. Yeah. Got it.
My
Yeah.
suggestion to my clients is always, if you are getting a lump sum amount upfront and it's a term policy, right? Anyways, they are offering a good amount. Take the whole thing. Why you want to leave it behind? Anyways, it's going to expire after some time. So depending on what year they are in the policy and all those things.
Yeah. Got it.
Yes,
And
bro. Yeah.
yeah, just one more question on the chronic illness, Anuj. Like, if the situation is chronic illness, generally they do the assessment for 12 years, right? I mean, is that
Not 12 years,
the
12 months.
12 months? Sorry, 12 months. Yeah. Every 12 months, they need to make sure they are eligible. But in those situations, if the chronic illness, if they come up with a number of $10,000 per month or whatever it is, so then you don't need to surrender the policy, right? After 12 months, if they are back to regular time, I mean, if they are not qualified, then in those
So,
situations,
yeah, so in this plan, they are not getting a monthly benefit. So
okay,
they are getting a lump sum amount upfront. This plan is in the term QOL plan. When you submit a claim, whether it's a chronic or any other, you get a lump sum money upfront, right? And then lump sum money can be used for any purpose.
okay,
So all you need to do is you need to certify by a health professional or health practitioner that in last 12 months you are going through this situation.
okay, yeah, got it, yeah, thank you.
Because and your question is good because see, let's say I did not accelerate the whole thing and I have let take out little bit, and then future again I am getting into another situation, then you need to again recertify by a health professional. that you are going through one of these, ADLs or other cognitive disease.
Yes.
Yeah, you were
One,
saying something, Prabhakar?
yeah. Let's say the person got cardiac this year, and again he accelerated the benefit for that cost incident. Okay. And again next year he got cardiac. Will he get the
Yeah,
benefit?
means if he has not taken the full money, if he submitted the claim but only accelerated a little bit of it, and then kept the policy active, paying the premium, and then next year again have a situation, yes, he can
Same
submit.
nature. I'm talking about the same nature of
Yeah,
incident.
yes, you can always submit it again.
Okay. Thank you.
Yeah, Anuj bhai, just a quick question, Nanda here. So when you claim this policy, so what happened to the death benefit? Does it reduce? Obviously,
That's what
right?
we are saying, right? That's what, let's say if you have $1 million policy
Mhm.
and you take out, company offers you
300, let's say.
300,000, right?
Mhm.
And they say this is the max we are giving you. You take it or leave it. And if you take that, usually they don't offer this less, like 300 is much less. Let's say 600 to make it
Okay.
more realistic. So let's say they offer you 600,000 and they say, out of this million, we are giving you 600 and you can take this 600 and let the policy go. So there is no more policy after that. You keep your 600,000. So that's the one option. Second option is client says, out of the 600, I only need 200,000. So please pay me 200,000 and tell me what would be my future death benefit. So the company will reanalyze and say, if you take 200, we'll still have, let's say, 600 or 700,000 active as a policy death benefit. So you will lose, it never will be dollar to dollar, like 200. If you take 200, then 800 is remaining. No, there will be some discount on that.
Yeah,
So,
got it. Yeah, yeah.
so
So,
Anuj,
yeah, in this case, like let's say, like as Prabhakar said, like you have some heart surgery on the first time. Maybe second time, maybe you can claim some more if that happens. Still, you can
Yes.
keep the policy active,
Yes.
right?
and with
But
the
see,
same premium, Anuj bhai?
premium will be adjusted based on the remaining amount
Okay.
because amount will be adjusted also.
Got it. So one last question, Anuj bhai, like how long typically it takes to settle these things
The
after
claim
the
processing. So claim, I personally got involved in one of my clients' case. So they have to submit a case within an year. If they wait more than a year, then they are not eligible to submit a claim. So 1 year within the one the incident happened.
Mhm.
And then once you submit the claim, usually company, and once you provide all the details, it's a very simple form that you can submit online. Once you submit that, company will reach out to the facility, whoever treated them, the doctor office or the hospitals. Once they get all the details, sometimes doctor office takes a long time to release the documents. But once company receive all the documents, they take 2 to 3 weeks to release the payment or
Oh,
make a decision, right? Mostly it's approved, but the 2 to 3 weeks it will be done.
okay, that's great. So most likely within a month, everything will be
Oh,
settled.
yes, absolutely. Yes.
Great.
After getting all the requirement completed.
Got it. Got it. Yeah.
Yeah,
Thank
so
you.
Hey, let me
okay.
add one more
Anuj?
thing, Anuj bhai.
Okay, go ahead.
So
Go ahead, Vijay.
basically, if the treatment is complete, if the treatment is still in progress, it may take longer. They will wait. So if they don't know the diagnosis, they don't know. So for example, it's a cancer, but it takes about 6 months to go through the process and all. Again, sometimes they may wait for that month. The treatment is finished until the treatment is finished. That's what I thought. That Shobha told us that took for her it took longer because she had two kinds of issues, and then they have to go through that and the treatment plan. That's why. But if it's a heart attack and it's resolved, yes, as Anuj I said, straightforward. But again, it's not. It's again case by case basis. You just don't promise your prospects. Oh, if this happens, we'll get it in 2 weeks, or don't promise that. So it's based on case by case basis, guys.
Right. Thank you. Yes,
Yes,
Harshit.
yes. I want to add one. So somebody asked the question, if in critical illness, let's say somebody has like heart attack and they claimed and they again had the heart attack, they cannot claim, because last time Aki was mentioning this. It could be a different thing. Maybe they will have cancer from critical illness. Yes, they can do the second claim. Absolutely. But you have the same situation. You can only claim once. So whatever Anuj was telling, if your client is asking you for suggestion at that time, you can always say, hey, whatever is company offering lump sum, take it. If they want to keep that, as for second time, it's definitely their choice. But guide them at that time. Let's just make sure if this heart attacks happens again, can they claim, right? So that would help them to decide at that time. But like Venkat mentioned, it's all case by case. Do not promise. Like, how does it work? I usually tell my clients, it depends upon the severity and situation. But at this, I'll just bring back to the, bring back to them. At least you have the $1 million to accelerate. Now, at that time, you do not have to go to your retirement plan or retirement asset or your savings asset. You can just go to this plan and accelerate, and we can see how much, depending upon severity and the situation, and your age, there are factors for that, right? But at least you have something to go to first, which is the option. You don't have to reduce your assets. So that's where I leave it, rather than going into, because we also do not know. We are not underwriters, right? It's totally depends upon underwriter. So I would say not to promise, or this is 2 weeks it will take, how much time it will take. That also depends upon what is the illness, that they are going to go through. So, but only thing that we have to show them is a value. There is a value, there is money, we can fall back on. So that's what going to help you. Yeah.
Yeah,
I just
great point, Arshad. Yeah, thank you, Venkat.
Hi,
So I
Anuj.
had a question.
Hello.
Yes,
Okay, go
Neha.
ahead, Jita.
Let's
Yeah, so related to that thing for what Arshadji said, so they cannot claim, like if they have two heart attacks, they can claim only for the first one. For the second one, they need to have a different term, or they can take it from the IUL if they have it.
As per
Like,
what Florida Aki was mentioning, I remember, that's what I remember, that Aki was mentioning. If you had the stroke, like heart attack, you can only claim once, and if you had heart attack again, probably not. But because of the heart attack, let's say you get into chronic situation, right? So you can claim for chronic. Like, let's say you're not able to do 2 daily activities out of 6, you can claim there. So
right. So if they have like two terms, they can use the second one, I guess, right?
absolutely. Yep, absolutely.
Okay, got it. Yeah. Thank you. Thank you, Neha.
Yeah, Anuj, I will have a quick question. Thank you for the, presentation from few days. From few days we are learning on term and how to approach, and the illustration as well. So thank you all for that. I have a question. Since since I know that these term insurances is not available for somebody who is um, less than 2 years in the country. So is there, other companies who gives term insurance for who are new in the country and like six months or 1 year?
That's a good question. I think North American gives them. Again, I'm not 100% sure for that.
Yeah, I applied with North American. So North American, do they allow to apply? Yeah.
Okay, okay. North American. Okay. I can check with them also, and thank you. So I have few clients like who are very new, 6 months, 1 year, but yeah, they haven't completed 2 years yet. So I was wondering I should approach them or not. So I have seen like in AIG they don't provide if you haven't completed 2 years, but yeah, I will check with them, the North American. Thank you, Anuj and Prabhakarji.
Okay.
Hello, Anuj. I have one question regarding if the client has this term and they went out to the US and they found some critical illness in India, so can they claim from there? Or
Yes, they need to have certified licensed professional from US, US certified doctor.
oh, okay,
Then they can submit a claim.
okay. And Anuj bhai, on the third page of this illustration, can you go to the third page?
This one? Which topic are you looking?
No, go up. Yes, yes, there. What this figure is means. Getting sick with quality illness along the way, and the figure is there.
Oh, so you're asking what this page is?
What this figure is saying, the qualifying chronic illness, yeah.
So they are giving some range, right? You know that for this $1 million benefit,
Mm-hmm.
if anyone gets into this situation, they may accelerate it to for chronic up to 170 to 636, for critical this much, for terminal this much. And then
It's approximate range they are saying, right?
yeah, based on the actual conditions. And then they explain these things here also. This 3, 4, 5 is the explanation of these.
Okay, thank you.
Yeah, and I suggest since you are licensed, just run and read through the whole thing. And
Yeah, this was, I have just made one illustration yesterday. I mean, the pack illustration, and I just got these figures. I just want to know that what is this.
yes, that's a good point. Okay, quickly, and then I have two more things to share. Anything?
Yeah, a couple of questions from my side. One is if the person passes away, then is it that the beneficiaries, internationally, does the beneficiaries needs to have an account in US, or is it like, how does it work? Anuj?
I think they need to have an active account in US always.
The beneficiaries.
Yes.
Okay. Okay. And just on the claim process, if the person is going through a situation, he or she may not be in a situation to do all the work in terms of submitting the forms and things like that. Will the agent be the primary representative, or the client has still need to be involved?
Yeah, I mean, it's always, that's what I tell my client when I help them, that if anything happens, I am your first point of contact. So but for any reason, if you cannot reach me, you always have access to the company directly. You can call their customer service number, or you can submit online also. So
Okay.
they have all these ways available. And if you want, you can provide that number on the top of the packet also.
Okay.
Okay, good. Now let's see. So I hope this is good for understanding. Yes, we asked a lot of questions, so that's great. Once you hear the questions, other people also get clarified on these topics, these points. Now, couple of things that I want to, because now like we are talking about approaching also how we talk about these plans. So first thing is have this brochure also ready with you. AIG, if you're licensed, Corbridge, allow you to order on their website, so you can have a physical copy of these brochures also. You can order 10, 15 of them, and I'm like the basic one, which is, I don't know why I'm messing up with this thing. I had it, and let me do that one more time. This one. So this is a basic product brochure that that everyone should have. And it talks about all the things, who this plan is good for and all those things, with this quickly explanation of critical chronic terminal riders and some of the important features of the plan, for uh, who can get it and all those things, right? And all the riders also. So this is very handy. Like if you are setting up booths and things like that, and so you can have this physical copy and open up this page and keep it on the desk. When someone shows up, they're asking questions, just ask this question like, hey, are you aware that your plan contains these benefits? And if not, let's sit down and let me explain you how this works. Super, super important, right? So whatever way you want to, but this is a good resource to have with you all the time. If you are working with a client remotely, have the digital PDF copy that you can share with them, because it's super important for them to read through these things also. And it highly talks about this AVRs in there. So brochures are very important. Now, other thing is we all have access to this page. Let me open up again. I don't know if you are aware of that, but all of us have access to this portal, which is from Corebridge. And in there, this call all the products, but you look for term life. And there is a lot of information out there. I would not recommend you to go in every sections and start mastering that and do a PhD on Corebridge website. No, just simply look at this section. Let me post this link into the chat. Where is the chat? I lost the chat also. So this is where you can have a lot of resources that you can use to reach out to your client. It's called client sales tools and sales concepts. So in sales concept, you see this, mortgage protection, single parent, older age coverage, individual versus employer. This is the common question we all ask. Let's see if I open this one. It has exactly what you always ask. Understanding the employer plan, the supplemental they offer, and the individual plan that we offer. All the details, and then a quick comparison of employer versus individual. You see, employer offers, yes, it's a good plan if you have, because there is no underwriting for the basic amount of coverage. And if you top up with more coverage, then you have to go through some underwriting there also. But people who are not in good health condition, like high diabetes with high A1Cs and all, or smoking rating and all, right? Tobacco ratings, then it's a good idea to maximize as much as you can from your work because it will be cheap there. But anyone else, you have best prices, level premium, it's affordable, no restrictions, with a lot of riders, which we just, one of them will saw the living benefits. So this brochure, if you have it handy, share with your, folks that you want to reach out to, and talk about that, why it is important to have a standalone policy. But please, before you send any of these things to anyone, go through it, understand it, read it. If you want to use this as an approaching tool, then there are conversion options. Now, some of them are very good, which says how cheap these plans are. Let's say streaming service versus protection cost. The streaming service means Netflix, Hulu's, and all those. People are paying way too much on these subscription as compared to what it can cost to have a standalone insurance policy. Like less than $15, $17 for a quarter million of a policy, whereas you are paying way too much for your own subscription. Again, I'm not saying you discontinue that, but people think having an insurance policy is super expensive. It costs a lot of money. No, it is less than that. It's less than a cup of coffee also, less than a cup of coffee, another brochure for that. Cup of coffee costs this much, whereas insurance costs this much. So all these are great help, nice to have versus must have. And I think one of them compared with the phone cost also. Yeah, your cell phone cost on an average $141 per month. I don't know which plan they're talking about, but as compared to insurance cost, which is much, much less. So overall idea is that it's not expensive. It's not really expensive to own an insurance plan standalone that you can control, and it can help you in the really bad situations, when you need it. Then some of these other things, which then product training wise, there's a product overview, which is like a slide deck, but it's a lot of details there. You don't need to worry about that. We are very competitive, so some of these are good product details, like the product brochures, and if you are having client in California, their version. So this is also good. This is a good site which has a lot of good information, and there are some training materials also for agents in the agent development. But again, we do a lot of trainings anyway, so it's our own platform here that we are using. But some people like to have a lot of resources and material with them, so this is another opportunity. But in reality, if you able to run a simple illustration using this tool and present this illustration, that should be good enough to close a direct, simple term policy. And look at this. The simple one is costing $231, which is very close to our weekly premium, a weekly target that we are setting for ourselves, right? So if we do for husband and wife, it's always going to be easily $200, $300, which is going to help them in the long run in any of these bad situations. So I think I'm not missing any other thing which I wanted to share. In between, anyone has any question while I'm thinking what else I wanted to talk, but I think we are all covered.
One quick question I had is basically, in IUL policy, if you miss a payment or something, I don't know too detail, it's fine. It covers it from the cash value and stuff. But in a term policy, out of curiosity, I do not know, like if you miss a payment as a client or whatever, like you do not pay, what is the consequences? Do you just get 1 month waiver or what's the deal with that?
That's a good question. I think they give 2 months of grace period. And after that, there is some period for restatement, like after providing some proofs of, but not 100% sure how long they can hold it. But usually, that's why I suggest my client to have an always EFTs, electronic fund transfer from their bank account, because sending them check or paying through credit card and all those things can be, sometimes you miss it out, and then chances of losing the coverage will be there. So EFTs are safe, but I think they have 2 months of grace period. I can double check.
Okay, 2 months. Okay, yeah,
That's
thank you.
correct, Anuj. That's correct. 2 months. And if it's not, you have time for reinstatement provided you pay all the premiums. For example, mine is due July, August, July and August 2 months. I have in September it's cancelled, but now October. As long as I'm willing to pay all the premiums, they will let you 6 months, I don't know, maximum 1 year. I don't know how much time. But it's called reinstatement. Reinstatement means you have to fill out the full application. They will do the underwriting, and if there is anything changes, they can always say reject it also.
That's if
So
you
it's
wait
like
for too long, right? Then they'll
too long. If
too
it's
long. Then
yeah,
they'll underwrite the whole thing again. Okay,
exactly.
yeah.
If it's
So
2 months, it's called grace period.
okay,
And yes, it will be reinstated, no questions asked within 2 months. If it's more than 2 months, that is when you're going to be like, it's like as if they're like, what, they can find it. Like, for example, when you're trying to close a house, they're like one day before they're going to call, hey, make sure you still have your employee, you're still working and everything is great, right? Before they close it. Similarly, when you're trying to reinstate it, they do the due diligence again. And I do have a personal experience where one person is not, again, he said, I'm just doing it, and then somehow we missed out on this one, and the next time when we did the restatement, they did not reinstate it because the client has an issue that's completely canceled now. We could not get it done. So be
okay.
careful when you guys have if a grace period comes, means it's you make sure. And one thing, and again, I don't know, it's the same for other carriers, but for North American, automatically it goes into a what you call quarterly payment. Once the payment is missed, it says quarterly payment is due
Okay.
because it's like grace period, right? So my client went ahead and paid the quarterly payment, and I thought everything is great. And next time, it's still in grace period. Like, what happened? Oh, he only paid for the last one, and he did not put auto pay for the ones going forward. So we just have to make sure exactly what has been done. Is it reinstated, and make sure just follow up. So because of my experience with the other client, I just make sure whenever I see grace period, I make it sure that, because it's first of all that we worked so hard to put that in place, and now we're just losing the coverage, right? It's not again, I have to go do more work now to reinstate the whole thing. So
Yeah, no,
definitely make
it's
sure.
understood because like when people go during hardships, they feel like, oh, I want to try to eliminate something, but that's not, you cannot. You really have to make sure this thing is paid and not put aside in, like, even if you go through a hard time in life. So that's very important. So
Yeah, that's great.
yeah,
I think, yeah,
yeah.
let's I know it's 11:30 and we thought for doing it for an hour, but let's wrap it up. And I think end of the day, why we are working so hard, why we are trying, everyone wants to make money for sure. That's one of the reasons. That's a strong reason that we all are working hard extra on a weekend also. So again, same simple target for our goal that we have for every one of us. Aim for a $250 target premium per week. That will, based on your contract level, will get to a good end of the year six figure, close to six figure, or even high six figure in personal income, personal cash flow. And how you can do it? By using a simple term policy, any kids IUL, or a small rollover. But term policies is definitely one of the ways. If you and then with your team, if you do that, it is very, very rewarding. So, and I highly suggest and recommend, if you submit any business, if you are helping any client or family, please post it in the WhatsApp group also that, hey, today I helped out a family with, let's say, $50 premium and getting towards my target of 250. Anything is good. We are not looking for some big numbers, but a small success is also very important. So posting in the group is super important, and sharing also in the group, that will motivate others also. So let's make it happen. Let's achieve this every week and go from there. Okay. Anything else, Venkat, Arshad, Prabhakar, Manish?
Yes, Anuj, I want to add one more thing. We had like 36 people, 32 people right now. And first of all, if you do not have a coverage, I would recommend everybody to at least have the minimum 1 million coverage or whatever you can afford right now, right? So if you go in field, you would be like more confident that you have it and you can, also protect other people. And we are in this industry, and if we do not have it, if something goes wrong, I mean, it should not, but it would be like really bad if we do not take advantage of our protection and our family's protection, right? So in 32 people, any of you do not have it, take care of that today. Okay, you can write your own policy too, so that's another added benefit. Thank you, Anuj. Great job.
Thank you. Anything, Venkat, Prabhakar, Manish?
Anuj bhai, can I ask question?
Sure.
This is Prafula. Can you briefly, I know there's little time, can you briefly touch upon policy replacement? Like somebody has a policy but not good terms and they find an alternate. So how does that work?
I did not understand your question. Policy replacement, can you elaborate a little bit more?
Like somebody has, say, $1 million policy and they are paying high premium, but there is another option and they want to like shift. So is that possible and how does that work?
Yeah, and that's one of the things that we do, right? If somebody already have a policy and they think they're paying too much premium, we offer a free review. So we'll review their policy, what they have, for how long, how much they're paying, and their health condition, and see if we can get them a better plan if they have a living benefit. So yes, we can always, replacement means it's not like a replacement. They have to let go that policy and we will get them a new policy issued. But I always suggest to first have the new policy in force and in place and then let go the other policy.
Okay, so that has to be done through which company? Like there are two different companies offering this. So the process, like I'm asking of the process.
Like any company, right? There are no two companies. Like we can get a policy from AIG, North American, Nationwide, Allianz, all the companies, Lincoln Financial, that we work with. So replacement is just basically comparing what they have and then what we can get them better.
Okay, okay. Yeah, thanks very much.
Yeah. If you're working with a client, sit with Manish also and see what policy they already have.
Okay, sure. Thank you, Anuj.
Okay, I think that's it for today. Let's stop this guy.